Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Friday morning and the cues coming out of global markets are fairly positive. Look at GIFT Nifty above that 22,000 mark, in fact firmly above that level, and of course S&P 500 on Wall Street overnight clocked in a fresh record high as well. And Japanese markets also continue to gain. In fact, it has crossed that 38,000 mark even after the Japanese economy has slipped into a technical recession. So, the Q is looking positive, the setup is looking good, and yesterday we saw a good up move coming in, even day before we saw a good recovery. So, whether or not that momentum will last today or not, we'll try and figure that out with our technical expert on the kind of levels that he will be watching out for on the indices. But of course, lots of stocks in focus. We saw block deals in Vedanta and Yes Bank yesterday. We'll take stock of these two stocks. We'll talk about Indigo, as the market share data for the month of January is out. So we'll be talking about a whole host of other stocks as well. But of course, we'll also be taking up all your stock related queries. So if you have any queries, keep them coming in on our live feed on YouTube. We'll try and take them up. But of course, let's take a look at the top headlines before we move any further. Wall Street closes higher on Thursday. S&P 500 added over 0.5% and closed at a new record high. In fact, the US retail sales data came in lower than expected, pushing the dollar and yields lower. Asian markets kickstart the day on a firm wicket. Japan's Nikkei opens 1.5% higher, despite the Japanese economy entering into a technical recession and losing its spot as the third largest global economy to Germany. The GIFT Nifty, meanwhile, hinting at a start above the psychological 22,000 mark. Brent is back above the $82 a barrel mark as oil prices rise on the back of weak global demand forecast for 2024. Meanwhile, dollar weakens on disappointing US retail sales data that came out last night. Government increases windfall tax on crude petroleum to 3,300 rupees a ton from 3,200 rupees earlier. In fact, the tax on diesel is increased from nil to 1.5 rupees a litre, while the windfall tax on ATF and petrol remains nil. And among stocks in news this morning, Axis Bank and Max Life respond to fraud allegations, say all necessary regulatory approvals were obtained for the stake buy. Also in focus will be Indigo, as it sees a drop in market share in January compared to the previous month. Well, let's bring on board then our technical expert for today. Joining me is Raja Venkatraman of NeoTrader. Well, great to have you on the show, Raja. We've seen a very good up move coming in the last few trading sessions, right? And look at the Nifty PSU Bank Index. I mean, in the last two trading sessions, this particular index is, it has gained in excess of 6%. Here on, do you think this is a fresh leg of rally when it comes to PSU banks? And, what is the level on the upside that you'll be watching out for on the Nifty? Do you expect the week to, finish above that 22,000 mark?
Yeah, good morning, Nandita. Thanks for inviting to the show. Now, if you take a look at the index over the last 3 days, yes, it's been going up. But then if you see, the last high was clocked almost a month back. So since last 1 month, we have not been able to exceed the high of around 22,100. So today is a very crucial day. Once again, we are trying to test that level. So we need to, yes, the day will begin on a positive note, but then what we got to consider is that we are challenging the highs over the last 1 month of 22,100, and it's the last trading day of the week. We have been on the trot and going up. So a profit booking scenario is very much possible towards the close of the day. So yes, we'll begin the day on a positive note, but then 22,100 levels is something which we need to close above for a move towards 22,500. So if we close about 22,100, I see two levels on the upside, that is 22,300 and 22,500. And on the downside, as the option data suggests, 21,900 could be a good support region. So 21,900 to 21,950, where the maximum pain point is there. So those are the levels which I will use as a dip buy opportunity. So at the moment, I will consider these levels and step into it. Now, taking a look at what's happening, the global markets, if they are showing some weakness, we are also reflecting the same. But then the internal dynamics of our country and the kind of decent numbers which are coming out, all that is helping us sustain the selling at the higher level. So yes, all of us are expecting a big crackdown. On the floor, everyone is expecting sub 20,000 level, but I don't think that's going to happen soon, because at lower levels, people are still buying into the stocks despite cautions being signaled everywhere and by everyone. Now, coming to the PSU banks, yes, especially after the RBI policy, the PSU banks have shown some good momentum here, and I continue to believe that today also the PSU banks will flourish, and today is a good day to consider PSU banks as a trading bet. And from that PSU bank space, I would definitely look at Canara Bank and Bank of Baroda, because those two banks are much better and actively traded amongst the PSU. Bank Nifty as a whole, yes, it's trying to survive lower levels around 44,500. I would continue to retain that because they are dragged down by the private banks. But then instead of just focusing on the Bank Nifty, it would be better that we focus on the PSU bank. So overall, market is positive and I continue to see a buy on dip opportunity, and till I get a closing about 20 to 100, I will not be aggressively long.
All right, avoid being aggressively long and watch out for that 22,100 mark on the index. Hold that thought, Raja. We'll come back and talk about specific stocks and take up viewer queries as well. But let me also bring on board, Aman Soni, who's the head of operations at Prudent Equity. Great to have you on the show, Aman. I want to first ask you your thoughts on PSU. Raja shared a technical view and said that, it's a good time to take a trading bet on PSU banks. But what are your own thoughts? Because, in the middle, we saw, kind of a deep correction coming in, at least for 3 days in a row. We saw a steep correction coming in across the PSU pack, right? But then we saw a very good bounce back. So here on, do you expect the PSU rally to be a lot more selective? And B, should one really deploy money at the current juncture, or do you think they are still looking expensive?
Thank you, Nandita, first of all, for having me on the show. So yes, you rightly pointed out that one needs to be very much selective going forward, irrespective whether it is PSU banks or broader PSUs as a whole. If we specifically talk about PSU banks, we can see that most PSU banks right now are trading at single-digit PE multiples compared to maybe other companies in the PSU sector like railways and defense. It's a completely different scenario in that case. So yes, PSU banks are currently a very much better place to be rather than the overall market.
Right, that was about the PSU pack, but let's talk about the broader end of the markets. We've seen intermittent corrections when it comes to the mid and small cap indices, but the correction hasn't been as deep as was being feared, right? So at the current juncture, where do you see value, especially in the mid cap universe?
Yeah, so see, there's going to be volatility in the markets that goes without saying. We have had a fabulous run in 2023, and it would not be correct of us to expect a similar kind of run. That being said, there are a lot of opportunities right now which are available in the market. Currently, we at a fund level are more into infrastructure and construction space. We have been bullish on this sector for the past 1 year. As you would have seen in the last budget, in the budget of 2023, we saw that massive jump in infrastructure spending that was announced by the government. And at that point of time, we felt like that was a no-brainer. And we had a couple of infrastructure names and construction names, which still at current levels also look reasonably better placed on a relative scenario compared to what's happening in the overall market. There are certain pockets which are quite overheated compared to a couple of names in the infrastructure and construction space where we still find value. And the advice to investors would also be the same, that you need to focus towards a stock specific approach instead of trying to invest in the broader markets. Stock specific would be the key to go for the year 2024.
But would you consider large caps vis-a-vis mid caps now, given the fact that, as you mentioned, we've seen a fabulous run when it comes to the small and mid caps, but large caps are yet to still catch up, right? So how do you play the large cap universe?
Yeah, so see, definitely, as I previously mentioned, that investors should look for a value, and value can be found anywhere. If I have to talk about from our fund's perspective, even though we have a major expertise in small and mid cap space, but in the past as well, we have been had maybe a 20-25% allocation in large cap stocks as well. So one needs to have that knack of trying to figure out where exactly the value is, where the company's earnings are going to grow at a much faster pace compared to the valuation at which is currently trading. So if one is able to identify this strategy and look for companies, then even large cap stocks can also add value to a portfolio.
Right, and particularly at Prudent Equity, how do you, or what is the kind of approach, investment approach that you are taking right now, to generate alpha for the long term?
So see, we try to keep our investment philosophy and strategy pretty simple. We don't try to rock the boat in a sense. We look for companies which are trading below their estimated intrinsic value. This is our core philosophy. We look for companies, as I mentioned, that are growing at a very high rate compared to the valuations that they are, currently trading at. And if 12 to 24 months down the line, given the earnings growth that the company can perceive, if the stock is currently trading at a relatively cheaper value, we try to identify that. So that is our core strategy, and that has worked out pretty well. Our fund on a 2023 year basis, I believe, have delivered roughly around a little over a 100% return. So that strategy has worked out for us the last year and maybe in the past more than a decade as well. So we'll just try to stick to that only.
Right, lastly, Aman, we have, a very young audience as well that tunes into Money Control, right? For somebody who's looking to start his investment journey right now, at a time when markets are knocking at all-time highs, what would your advice be to those young investors now?
Sorry, Nandita, I lost you in between. What was the question?
I'm saying that we have a lot of young audience who tune into Money Control, right? And for somebody who's looking to start his investment journey at the current juncture, especially at a time when the market is at record high, what would your advice be to these young investors?
Okay, so I'll take your second question first on the markets being at an all-time high. So if we talk about 12 months back, I believe in similar Feb of 2023. We were at an all-time high at that point of time as well. And 12 months later, the Nifty has delivered, I believe, roughly 25% returns. So as long as any investor has a 36 to 48 month time horizon, I think equities is the place to be. We have enormous data that tells us that with a 36 or 48 month time horizon, equities deliver a relatively better return compared to any other asset class that is out there in the market. Now, what should investors do in the current scenario? It depends upon their strategy. If you want to be a full-time investor, if you want to dabble directly into stocks, yes, you can do that. But the best approach would be to obviously have a fund manager in place that, or an investment advisor that can take care of your investments, because that is a relatively better approach to the markets. And overall, in the long term, if you're able to generate 18, 20 or 22% kind of returns, over the long term, maybe in a 10 to 15-year period, how the compounding works, that would be the best strategy for newbie investors that are currently coming in the markets.
All right, that's the advice for young investors. And with that, Aman, appreciate your taking out time and joining in this morning and sharing your thoughts with us. Have a lovely weekend going forward.
You too. Thank you. Pleasure's all mine.
Well, thanks a lot on that note. But let's go back to Raja. Raja, before I move on to other stocks, I want to get in your thoughts on HDFC Bank. There have been some, new home loan products that the company has announced. And yesterday, of course, we saw a good up move coming in on an HDFC Bank at a time when other private banks were under pressure. So here on, do you think HDFC Bank on the charts has, is close to bottom, if not it has already bottomed out?
As far as HDFC Bank is concerned, news flow will keep coming in because of the size of the organization and also the kind of FII participation that continuously happens in the stock and the weightage it is having in Bank Nifty. But then what one needs to realize is that any positive news only triggers some short covering. Now, in the last few months where HDFC Bank has been asked as a query, I have always said that stay out of it, and I continue to maintain that there is no scenario yet for any bottom fishing. What we are seeing right now is an oversold bounce. So I would largely treat it as that, and it is this moves which you see in HDFC Bank is largely an intraday play.
All right. That's the view then on HDFC Bank. But, stock of the day, Interglobe Aviation, Indigo, saw some bit of a drop in market share. If you look at January data, 60% or thereabouts vis-a-vis 61% in the previous month. And the stock has been under pressure off late. Raja, it has been marred by flight delays as well. Here on, do you see a trade in Indigo, or do you think too volatile?
Yeah, this stock will continue to remain volatile, and but the sector in which the niche sector which it is in right now, the obvious choice for this particular stock is to go up. So at every pullback, Indigo could be a good stock to invest. So any dip which comes in, those who are looking to invest over the next 1 year can see a targets of around 4,500 within the next 1 year. So any dips in this stock should be used to buy into. And for those who are looking to trade intraday, if you want to go short on an intraday. Otherwise, this stock is showing some good traction to the upside. So I would not be short in this particular counter over a larger period.
All right, that's the view. Avoid being short in the counter for a longer period. But let's talk about, BPCL, HPCL, brokerage call of the day. Jefferies has come out with another bullish report on OMCs, wherein, it has upgraded BPCL to buy from underperform. Target has been raised to 890 vis-a-vis 415 earlier, right? And, as I mentioned, PSU stocks, especially the oil and gas pack, has been extremely buoyant. BPCL, what is the next level that you'll be watching out for? Because, all these counters have been on an upward run.
Yeah, if you recall, the last week itself, I had flagged off HPCL, where it was trading at around 470. Now, the stock has really moved up from there. So, the entire OMC pack, I'm very bullish on the OMC pack, and I continue to reiterate that this has been an overlooked space. And I continue to believe that all the stocks, be it BPCL, be it HPCL, be it ONGC, so the entire pack is going to show some good positive traction. And the last quarter of 2023, the FIS, this oil and gas space, was one of the largely invested sector as far as the OMs, the FIS are concerned. So it continues to go in line with what you mentioned right now, the revision of the weightage. So target which I'm seeing in BPCL is towards 750 by the end of next month.
All right, 750 by the end of next month. But let's start taking up some viewer queries that are trickling in. First one on Vedanta. I think Parth has written in and wants to know your thoughts. Of course, yesterday the stock was down 4% or thereabouts. Promoters have sold 1.8% stake, to be specific. And, of course, stake sale, after that the free float increases, right? So that could mean some bit of, kind of pressure on the stock. But do you see more pressure here, or do you think there could be a gradual recovery in the stock price?
See, Vedanta, if you look at the charts, it shows upward traction. But then what one needs to understand is, does the stock undergo a lot of pain? Yes, the answer is yes. So one needs to consider that if you want to go into the metal space. So I always come from the sector to the stock. So if you look at the sector is doing well. And if you really want to participate, then you should be looking at say a Nalco or a SAIL or a Jindal Steel, where there is continuous buying emerging at lower levels. Vedanta is having a lot of pain, and it would be an avoid from my side.
All right, Vedanta is an avoid. Parth, hope that answers your query. But the next query is coming in from Naveen, and he wants to know your thoughts on a KPI green. He wants to know whether it warrants a fresh entry. Yesterday, the stock was up 5%, and there's been news flow of the company bagging a solar project as well, right? But, KPI green, how would you really view this stock on the charts?
Yeah, definitely this stock is poised for some upside. It's got a good flip from the government as far as the solar energy, solar sector is also concerned. So this stock would continue to do well. One should look at this stock at current levels. It's showing a nice reversal here. So I would look to be a buyer in KPI green.
All right, that answers your query. I hope, Raja has said that he would look to be a buyer in this particular counter. Next query then on Sudarshan Chemical from Kaleem Hashmi. And he wants to know, in fact, he wants to buy into Sudarshan Chemicals at the current price for, the short term, 1 to 2 month kind of time horizon. What would your advice be? Yesterday the stock was up somewhere around 7%, and in the last 1 month we've seen a good 9 to 10% kind of an up move. Would you wait for a bit of a cool off, or do you think it's time to go?
No, it's actually a very good query because the stock has been in consolidation for almost 9 months. It saw some pain as well, and then it has recovered from lower levels of around 450. And now what we are seeing is the sustenance of levels above 550, which is augurs well for the particular stock. So now the positivity of the stock is just building up. So it's a good time to invest into, and you can expect a target towards 750 within the next 3 months.
All right, that's your query being answered. 750 target over the next 3 months. Moving on to the consumption pack, which has not been doing all that well. Raja, we have a query on stocks like ITC, HUL. Akshay has written in, and he wants to know what to do with these stocks because, of course, they have been under pressure over a prolonged period of time. Going forward, do you see any bit of recovery? Do you think avoid trading into these counters and perhaps look at them as investment, bets?
Yeah, so ITC and HUL again, I recall the last time also we discussed, the stock has dipped even lower from the last week, which clearly indicates that the stock is under sustained pressure. Those who were hopeful of any recovery in the consumption scenario has also starting to giving up. So now when you see here, for example, ITC looks to be heading towards the 345 zone. What could save it is an oversold bounce, which should be used to exit. So you may get an oversold bounce towards the region of around 410 to 420, which should be used to exit. Or better to exit right now if it breaks yesterday's low, because the stock, if breaks yesterday's low, could head towards more downside.
All right, that's the view on the consumption pack then. But let's take up a query on Centum Electronics. If you track this stock, this query has come in from Debu K. Now, this stock, if you look at the charts over the last 1 year, has nearly doubled, right? And yesterday as well, it was fairly buoyant, moving towards 52-week highs of 1950 levels or thereabouts. Here, how should one really go about this particular counter?
See, when you take a look at the movement, we have not been able to see a very encouraging move here. So, what one needs to consider is that the revival would definitely attract some selling pressure. So, if you have made some profits, one should exit. Otherwise, you can continue to hold on because the movement is going to be a slow paced one. So, if you're looking to enter fresh, then it would be an avoid. Otherwise, if you're already having a position, you can look to hold.
All right, that's the view on Centum. But New India Assurance, this stock, after a very stellar up move, the stock has seen, a sizable correction. Look at the 5-day chart, 20% shaved off here. Do you expect, the pickup to be a little more slow here on New India Assurance?
Yeah, the last few days, the PSU pack definitely witnessed some sell-off looking at the way the markets folded. But then once again at lower levels, this stock will continue to witness some good buying because the entire insurance as a space has really emerged over the last 3 years. And that's why you have notable names who are playing on the floor. So you can see that the insurance sector will continue to drive some demand. It's a nice new sector that has developed. So I would continue to believe, and the stock has NICL has dipped into nice supports. So look to buy towards the level of around 230 would be a good level to buy into. 230 to 225 would be a good level to buy into.
All right, that's the view on New India. But, lastly, one more query on Uno Minda coming in from Sudrashya Srivastav. Does it warrant a fresh entry at the current juncture? Very quickly, what would you advise?
No, I would not look to advise when us. I would not like to catch falling knives, if I were to say, because it's a time to exit your position because more pain is in store.
All right, hope that answers your query. But with that, we've come to the end of the query segment. Raja, what are you spotting on the charts for our viewers this morning?
Yeah, my first stock which I would like to recommend is a buy in BPCL around 652 with a stop at 642 for a target towards 665 and 673. And my second buy would be from the auto space. It would be a buy in Bajaj Auto with at current levels with a stop at 8040 for a target towards 8185 and 8225.
All right, those are the two recommendations coming in from Raja. But Raja, before I let you go, one more thought from you on the IT pack. Of course, we've seen some bit of caution creep in. Today we have a brokerage view also. CLSA has reiterated its cautious stance. Stocks had run up, but over the last few days they have come under a fair bit of correction on concerns over the recovery being delayed because of the delayed rate cut in US, right? So here on chartically, do you see any changes? Do you think the trend could be a little on the downside for the IT majors, especially the likes of TCS, Infosys,
Yeah.
Tech Mahindra?
So earlier also you spoke about the all-time high. So there is every time at all-time high there is a fear that the correction will happen and the correction will be steep. But then that always gets overwhelmed when the demand comes in. So there is a surfeit of demand that is there. So any correction in notable names is only going to be bought into. The technically I don't see any kind of correction emerging. I see that yes, there is a possible reaction. So there is a difference between reaction and correction. Correction is inbuilt with a selling interest, but a reaction is something which you should be using to buy into. So I feel that as long as the index does not break 36,000 levels, one should continue to hold on to the IT space, and especially the mid-tier IT would continue to outperform.
All right, that's the view on IT space. The mid-tier IT stocks will continue to outperform. But with that, we are completely timed out on this edition of Morning Trade. So thanks a lot, Raja, for taking out time and joining in. Wishing you a very happy weekend, and we'll touch base next week as well. Well, with that from me and the entire team, thanks a lot for tuning in. But of course, remember 10 a.m. there's a new listing, Entero Health, likely to be a muted debut, but we'll be watching out for that at 10 a.m. So. With that, thanks a lot, and of course have a great weekend and come back and join us on Monday as well on this particular show. But for now, stay tuned because coming up next is Opening Bell.